Hey everybody, it's Saturday, July 12th, 2025. Our episode begins with market goes up, makes tariffs be announced, like we had this morning. More tariff announcements, this time on Mexico and Europe, 30%. And when markets go down, that's when Trump comes out and says, hey, hold on a minute. We're not trying to end the world or anything. Hit the pause button or announce that they've made deals. Back on the merry-go-round we go. With the announcement made this morning, I'm sort of expecting markets to react negatively going into next week until we hear some bad news. Or if the markets don't go negative, I expect to hear more bad tariff news so that the market does go down. It's like a cat playing with a ball of yarn or something, the yarn being the markets. It's really what it seems like the environment is at this moment. Next topic, July budget surplus. Now, it's nothing to get overly excited about, but we did have, for the month of June, a surplus, which is sort of notable because June is one of those months where we don't normally get a surplus. We always get a surplus in April. Sometimes they announce that in the news, by the way, and make it sound like it's a big deal when it clearly isn't, because April is when everybody's taxes are due, and every single April you see a surplus pretty much through history, and then you get some Augusts, you get some Januaries in there, not so much some June. So last time we had a June surplus was, let's see, it was back in 2016. You see this little blip here, and so but then it's sort of good news in that, like, it's not a further deficit, and for people that are on the side of the fence saying, hey, the deficits are out of control and they're just going to keep spending and spending, well, according to what I'm hearing, the tariffs that are being collected in tax revenue is adding to the federal budget in a positive way right now, and it looks like it has a chance of continuing in that direction. I don't know, we'll see. Any which way, thought it was a bit notable. Moving on to the community topics, I got a question for the community, for all of you guys. I want you to write in the comment section below, what's the lowest you think Bitcoin will go to between the years of 2025, this year, and 2035? So from today, over the next decade, what's the lowest that you think Bitcoin will go? I'm very curious what you guys think in the comments below. My answer, 23,000. I think it actually might get lower than that, but I'm going to go on the safe side and say 23,000. Write your comments what you think it'll get down to in the section below. Next, coming up, more tariff updates, of course, because we'll never hear the end of this game, as I explained at the beginning of the episode. And next week we have important reports, CPI and PPI, giving a sense of inflation and the jobless claims, especially the continuing claims, which continues to be higher and higher. And if this starts accelerating and starts showing that it's getting out of control, well, you can bet your last dime that the recession is beginning. Thank you for watching, subscribing, commenting, and supporting. No changes to the daily reminders, macro views. Read my website in the description to hear my explanations of those things, and no changes to the crystal ball readings nor the Robschild portfolio for today. Moving on to the charts, we'll start with the S&P 500, the SPX, chopping sideways. Most chartists I listen to are still highly expecting a move down of 5 to 8% from this level, and with the tariff announcement on Saturday, it's almost like it's just being written. It's like a story being written by a child at this point, it feels like. So I do expect markets to get bearish this next week, but we'll see what happens. Next, I wanted to bring up DXY, the dollar index, because of its importance and correlation to lots of things. A lot of times when the dollar is going up, that's also like a signal for the markets to actually go down. And we recently crossed above an important line that Ira Epstein's been talking about, 97.68. Closing above that, some chartists say we're still like fighting in this zone. I see this line as a line that we fought to get under, we fought to get above, and now we're above it. So I think the dollar actually looks pretty bullish right here. Next, I want to talk about TLT, my favorite place to be. I find it, like I've been saying since the very end of June, we've been falling pretty good in TLT, getting a bounce and then another fall. And yet, the MOVE index, the volatility of bonds during that same period from the end of June until now has been falling and falling and falling. So the market's expecting less and less volatility out of bonds. In fact, we haven't seen this level of non-fear. I'm trying to refrain myself from saying complacency here because when the VIX goes really low, sometimes that can be a complacency sign. But we haven't seen it this low since really 2022, the beginning of 2022, so a while ago. Notably, the MOVE index has been, in a range much lower than that for a long time. So, longer historically speaking, still a bit elevated, but I find it interesting, mostly just the divergence between TLT dropping and the MOVE index dropping at the same time still. Next, I wanted to bring up the 10-year break-even inflation rate chart from the Fed. This is how the Fed gauges what the market is expecting inflation to be. Literally, when this dropped down to 2, that's when they started doing their cuts back in, I think it was September 2024. So now we are creeping up again, and we've actually, on Friday, we reached that same peak level that we saw on May 14th. So we're sort of at a turning point. Are we no longer in a, from February, a situation of lower lows, lower highs? Is that ending? Or is that continuing? If this continues to creep up on Monday, then we no longer have a lower low, lower high clear situation going on. It's more sideways than anything else. It'll take time to see if the market starts anticipating higher and higher inflation. Right now, it looks like we may be headed into a sideways situation, but something to always keep a very, very close eye on. Last chart of today is simply Bitcoin, only because, like I said in the beginning of the show, my expectation is 23,000. Well, where do you get that number from? Take a look at this orange line. In fact, I'll make it thicker for everybody to see. Make the whole thing thicker. All right. So this orange line here, let me show you guys. It connects to the exact top of 2017 before it dropped 83%. And then in 2021, it hit that orange line and dropped halfway down, hit it again, and then dropped from that point 77%. And then we hit it again in December of 2024 / January 2025 before going down halfway again. Look at that, exact same pattern as 2021 and 2022. And where are we right now? We are at that orange line again. And so if we were to drop down 80% from, I had this at the exact high, recent high of where we are at. I measured it out to be going down to 23,000 on Bitcoin, which is where I get that number from. And some of you may say, well, Robschild, why do you think it's going to be an 80% drawdown? After all, the first drawdown you mentioned was 83.5%. The next one was only 77%. Well, my reasoning that I think it will be at least 80% is because neither of these drawdowns included a recession. Do you remember a recession happening in 2017, 2018? Do you remember a recession happening in 2021, 2022? There was a bear market, but was it a recession? with all the recession indicators flashing red and the bells going off, you know, and the amount of volatility and beta that Bitcoin has, I fully expect to get at least an 80% correction in the price of Bitcoin. I know that's hard for a lot of people to hear, but you've heard it here first on Robschild, and that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.